Welcome back, everyone, to another episode of Profiles in Risk. I am your host, Nick Lamparelli. Very pleased this morning to have not only fellow thread brother in design, but now becoming a good friend, as this is take two, Thomas Jennings. Thomas is the Director of Business Development for the AAIS. Thomas, welcome back.
Thank you, Nick. Appreciate it.
We should probably talk about Reign Supreme at some point. Maybe we'll leave that to the end, kind of in project between us. But this particular session is a conversation that we're going to have regarding a conference in Palo Alto on blockchain. But before we get into all of that, just to make sure our audience is familiar with who the AAIS is, can you spend a couple minutes and talk about the AAIS? And let's talk about that mug.
I just sneak in a quick sip of coffee. I was like, all right, well, if I'm going to be talking for a little bit, we gotta wet the palate.
I'll do the same.
Yeah, we've got our matching coffee mugs, got our matching shirts. Mine's got a broken handle though. It's I refuse to get rid of it because it's my favorite mug. But
is that a metaphor for the insurance industry?
It still works. It still does everything it could, but it could be so much more if they would just work with us. Just this much more.
Perfect metaphor.
I wish I'm not sure who the dog is that broke it in the insurance industry, but we'll leave that otherwise. So, but anyway, so AAIS is the American Association of Insurance Services, and we are a not-for-profit insurance advisory group. And we kind of found ourselves in that position through, we're codified into law under the NAIC model law, which allows us to kind of occupy a pretty interesting space, the insurance industry, where
just to be clear, advisory meaning not like a consulting company.
Correct. We are,
right.
and not
you guys occupy a very special niche within the insurance industry, protected by law.
Correct. And can basically act as a conduit between large carriers to transfer and share data without violating antitrust laws. And so that's kind of that's the biggest, I think, kind of, if I think about what our constitutive elements are, that's almost like the most important one, is that because of where we sit, people can use us as sort of as a trusted source to, put data in, talk about the state of the industry, talk about kind of what's going on, and then we can help kind of keep the insurance industry, healthy, wealthy, and wise, I guess.
Yeah. So you do ratings, you do forms. I mentioned on take one, you're the first person from AAIS to actually join the show, but in 2019, we will have representatives from the AAIS coming on to talk about the new cannabis product. So you guys actually go through that process to help insurers develop new products. And based off of what I've seen for the session that you're doing in Palo Alto for the Silicon Valley Insurance Accelerator, also new technologies as well.
Absolutely. And so the cannabis product itself is Cannabop. We launched that.
I love that.
Right. It has such a nice ring to it. Like, people are like, well, what is, Cannabop? This apology, but that's fine. So we launched that in 2018, and kind of like you said, we ended up taking a look at sort of what the insurance industry needs or wants, or what kind of the next, phase of things are going to be. And for us, kind of like you touched on, where, we do stat reporting and regulatory reporting, and then develop loss costs, not a rate, but we develop a loss cost out of that. We kind of took a step back and said, okay, we feel like the process for stat reporting could be a lot better. In its current iterations, current form, it's about 25 years old. It does not leverage any of the new technology that is available to the industry as a whole. And so what can we leverage? What can we use to make that better? How can we make it more useful for the user community that is involved with it? And so from there, we decided that we were going to launch a blockchain platform, and that's OpenIDL, which stands for the Open Insurance Data Link. It's so many acronyms this morning. It's just I can't keep them all straight. So Open Insurance Data Link, and it's our blockchain solution for statistical and regulatory reporting.
Yeah, so not only, as you mentioned, not only is the technology probably antiquated, it probably hasn't evolved or kept up with, technological innovations as they have occurred. It's hard for any corporation to do that, never mind a nonprofit. But something that we discussed prior was just the sharing of information between organizations brings up the element of trust.
Right.
And that's another issue, another hurdle that you had to overcome, that potentially blockchain provides the appropriate technology to handle that.
Correct. And I think, I mean, as you just sort of watch the general kind of lay of the land, you see like kind of data breach after data breach after data breach. It's I think becoming harder and harder for people to to really trust what people are doing with information and what's going to happen with that information once they kind of quote unquote put it out into the world. And so, especially with an insurance carrier, where kind of one of their penultimate goals is to just make sure that they have information security and that they're not just spilling out needlessly information to anybody. It provides a fantastic answer to that problem as just kind of a first cut, or one cut of many problems. So yeah, it's an interesting technology. And I think kind of that same point, by that same token, I've started to try to say the word blockchain less and less, because it is starting to, there's some baggage, and I think your word for it was better, was stigma. Just because people are, they get kind of confused between having an open, like a completely public blockchain and a private blockchain, and then they'll say, oh, a private blockchain is just it doesn't give all the same benefits that a public one would. It doesn't, it's not. You have one central body that has to preside over it, and this, that, and the other, and so they sort of try to just like throw the baby out with the bathwater. And in a situation like this, where we have some known parties, and we really just need to use it almost like, I don't want to say it's like couples therapy, but it kind of is.
Yeah.
It's a tool to go ahead and improve that relationship, where you can, I'm gonna put the couples therapy thing to the side. We're gonna use a different metaphor. But
well, the example we used the last time was the home that I'm sitting in, right? You have, outside of insurance, we don't even have to bring the insurance party or stakeholder entity element into it. Just outside of it, you have lenders and contractors and a whole the town, municipality, that all have a stake in whether this house is a wood frame or not, whether it is 2 stories or not, what the value of this thing is or not. Bring in the insurance entity. Now you have another entity that can vouch. They're either doing inspections, and what attracts me to blockchain is that entire process is opaque. And it's a shame, right? That you have, a lender who has sent somebody to this property, and they said, yep, it's a 2-story wood frame structure at this valuation. You have the town assessor who has come and said, yep, this is a wood frame, two-story building with a certain valuation. And then you have the insurance company all doing the same. I can't think of another technology that can weave or stitch together those disparate sources that can then be used to provide some level of integrity to what this is. To me, it doesn't even have to be right. It's just that you have a bunch of disinterested third parties all contributing information to this thing that then becomes valuable to everybody else on the outside. When the lender says, oh, the insurer has vouched for us as well, okay, then that's what it likely is.
And it'd be especially neat, like what if we could then put that all in one spot, so that then every time you needed to come back to it, you didn't have to go check with the assessor, you didn't have to go to the town municipality, you didn't then also have to go back to the insurance agent and sort of start trying to look in 3 different places to get the same answer to one question. Wouldn't that be neat?
Wouldn't that be neat? Crazy. Yeah. I was having a conversation online. This is another example that came up. Let's say a contractor came over, and I live in Florida. I don't live in Florida. Let's say, assume I lived in Florida. I wish I lived in Florida right now. And, they redid my roof. Florida has very strict building codes when it comes to roof design, rightly so, for hurricanes and wind exposure. And let's just say the building code said 6-inch screws need to be used to fasten the roof in. 10 years from now, a hurricane hits, rips the roof off, inspector goes in and says, wait a second. Not only did they not use 6-inch screws, they used 3-inch nails to nail this down. There's a liability here.
Mm-hmm.
Now, think of the massive amount of expense that would be required to hire a lawyer and then to ferret your way all the way back through the rabbit hole to figure out who was the contractor and who was insuring them, because that's a product liability. And again, I get back to only a blockchain where what you were describing is that central source that has this disparate information all plugged in there would have that information.
Yeah. And well, then I think the other thing too is that then you can sort of say, at one point we assumed this roof was made with 6-inch screws, and now, oh, by the way, we know for a fact it's not, and we need to go ahead and we need to write a new block. But you can see the evolution of that record as well, where you've said, okay, it went from this to this, went from our understanding of it was this, and now we've gotten, eyes on the ground. Do we all agree that this is the truth? Yes, we now agree that this is like the new truth, and go from there.
Yeah.
And in some ways, it could also be that what could be a kind of a fun takeaway from that is you could say, we've had 6 inspectors go through, or 6 contractors go back through, and they've come up with 100 instances where we saw we assumed there were 6-inch screws in all these roofs, and now we're finding in all these instances they were all 3-inch nails. Who built it, and then how many of those houses in this area have been built with that? And if everybody was sort of had those records together, they could say, oh, we thought this liability was 3 homes, turns out it's 10,000. And then, oh, now where is that on your books? And you could start ferreting all that information back out and get a much better, more clean understanding of sort of what's going on in your in whatever area you're covering. And the big thing there too is that, which I think kind of backs out to one of the bigger things we're working at, is that's not like a data volume question. That's a question. So a lot of times, one of the things too that blockchain can kind of help out is by saying, okay, we have questions we want answered. I don't need to see that house is on, the 1700 block of this street. I don't need to know that it was built in 1908 per se, not for this question at least. I don't need to know, like I said, address. I don't need to know that the stud that the wood frame is 18 inches instead of 24. I don't need to know any of that. My big question is, was this roof repaired between these 2 dates, and is it currently reported as having 6-inch screws? And if the answer to both those questions are yes, we need to reassess. If no, then we're going to go ahead and be hands off. But we've sort of you can say that there can be questions that kind of percolate up, and people will then want to address those, get an answer to that specific question, and then move on without just dumping out all the data they possibly have on that home. And so, that's the facilitation of a smart contract. And so it's kind of using those tools together. I don't want to say like sky's the limit, but it very much changes the entire nature of information sharing between 2 parties.
Oh, sure. I'm even thinking like we can't even imagine what that looks like. So once creative people start to play with it, they'll start to imagine different ways to bring more value, both for their organization. Ultimately, though, I think once they bring it to their organization, it kind of seeps through, and the chain and the smart contracts then seep out into other realms as well. And it's I think we get to like basic economics. It's value creation. We're getting more for less. We're taking all of this disparate information, putting it together, and then all of a sudden, all of these new ideas and products and solutions start to emerge from that because it's finally been organized in an economical way.
Yeah. And so it's it's almost kind of like we need to just get past this first hurdle of saying, no, this blockchain is not cryptocurrency. No, you don't know. It's not like once you sign on for any blockchain platform, it's not like, no, all your data belong to us now. You still have control of your data. It's still very much yours, but it's just we're going to be working with it in a new way.
Yeah.
Oh, and by the way, it's also be more secure. So that's an aside. But
you could probably decide who gets to see it, who does, or what parts of the chain. What parts of the chain get to be seen by who, and not by whom. So that's very clever. That would offer a lot of protection as well. Um, it it's almost mind-boggling that all of this disparate information has existed for all this time, and we as an industry have been complaining for decades that, how are we supposed to collect all this information, or we don't trust it.
Right.
And it provides such an awesome solution. Could we go into your session?
Yeah, let's jump into that, because otherwise I could
Actually,
speak
before I
about
jump in, I just remembered a question I wanted to ask you. Uh, to me, the part of the biggest hurdles to get people to disassociate the crypto
that. Yeah.
part of the equation, the Bitcoin part of it. Although I'm thinking there's probably I bet there's some creative person's gonna find a use, maybe not Bitcoin itself, but to tag a cryptocurrency to elements of this to encourage people to do stuff. I'll kind
Yeah.
of leave it at that, but that's always the thing I struggle with, is like, it's not Bitcoin, it's the technology behind Bitcoin.
Correct. It's the ledger that starts, because that's all that Bitcoin is. It's you get a proof of work that then feeds into the next block in that chain, and so it's just sort of it's just going back through and saying, okay, you did this proof of work, and now you get this next proof of work, you get this proof of work, you get this next proof of work,
Yeah.
and because that you were then allotted a certain number of coins, and then those transactions, those coins are put on the block as well, or on the chain as well, and so they can sort of just that's how it all percolates out, and so you can use that same technology with private parties, and
They're already doing the work.
yeah, they're already doing the work anyway, and so
Yeah.
what's nice there is it's less. There's still going to be an encryption from block to block, just to make sure that it is secure, but it no longer is tied to a currency of any sort, and so it's not tokenized. But at some point, you definitely could. You could sort of say, hey, by the way, like, oh, if you put this level of information, so if we can sort of say, we're looking to get X level of information, X quality of information, you will then receive, X number of tokens on something else, and that could spin off in its own way. We're taking it real slow though. Slow and steady in our mind. I think it's going to kind of win the race here, so.
Well, that's a perfect segue to your session, which is called Design Thinking for Blockchain-Enabled Products and Business Models. And in our prior conversation, we actually spent quite a bit of time on design thinking and why that's important. We also spent a little bit of time not boiling the ocean. Like, we can make this come out and try to make this super complicated and it will fail. Or we can look for particular use cases, which AAIS has a natural one, stat reporting back and forth between the NAIC and insurance companies. So let's talk about your particular session, and why did you want to do that session in this particular way? Talk about why you think that it's valuable to integrate design thinking into a strategy for blockchain and smart contracts.
So for us, so kind of when we, like you already mentioned, when we decided to launch the OpenIDL, we came at it from the position of saying, okay, let's go ahead and we know what we want to do. We have a use case where this is going to work. How are we going to make this work best for the people that actually touch the product, for people that actually use the platform, for people that are actively working with it? And so we wanted to go ahead and make that happen the best way we could. So we said, all right, let's also make sure that this development process continues moving along. So we said, all right, we're gonna commit ourselves to quarterly releases, and we need to make sure that each of those releases actually makes sense, that we're actually doing something that creates value for the users. And so we basically started implementing a design thinking process around those quarterly releases. And we originally introduced to design thinking through, or maybe not originally introduced, but we started leveraging design thinking through IBM because they're one of our key partners for the OpenIDL. We've developed it in conjunction with them because the whole thing's built on Hyperledger Fabric. And so basically what design thinking does is it says, okay, let's develop a set of user stories and make sure that each release fulfills those user stories. And so to generate those user stories, you can kind of start with some prompts. As a blank, I need blank so I can do blank, something of that format. And it's thus far been quite helpful. So basically it was our way of saying, okay, how do we make sure this is germane to our user group? I think that's the easiest way to go ahead and just say it. Like, how do we make sure that what we develop actually makes sense for those people?
And you focused on solving that one problem.
Right.
Right, which I think is extremely valuable because, for one thing, if you can solve that problem, that's valuable in and of itself. Even if it doesn't expand beyond that, you've still solved one problem. And if other entities, other groups end up solving their little problems, now you have like a checkerboard of solutions that could then require a new technology, but something to come in and then kind of stitch those together so you get a more seamless solution that's more all-encompassing.
Absolutely. And I think kind of your point is that, by making sure we stick to kind of the quarterly pace, there's always a problem solved, and it always makes sure that whatever that problem we solved is solved in a way that works for the users. And so by sort of making it very much a user-centric world, because I think, like we touched on in our last conversation, anybody that's been in a product manager role, or has been a product development role, or has been anywhere in that scope, or even just as we'll leave it to those two, they've had a situation where they said, this is what they want. We know this is what they want. Let's develop it. And then you spend 3 years putting it together, and then you take it to market, and then everyone's just like, what the hell is this? And then everyone goes back, inside the company and starts scratching their head. And they're like, oh, what do we do wrong? And it's like, well, you didn't listen to what the users wanted. And so, like you said, it makes sure that incremental step is always working in favor of the user. And so it just keeps it user-centric. And then, like you sort of pointed out in the other direction too, is that then you can then start to get, a functional sort of pillar that you can start working from. So when other technologies begin to emerge or sort of come to fruition, you can stitch them together. So I mean, there's things like Burrow, and that's the Hyperledger's sort of tool to start working on interoperability between Hyperledger and Ethereum. So Ethereum works well. It has a function, and it does what it's supposed to in a lot of situations. It does things that we're not going to be working on right now, and there's no point to us trying to develop it. So we're like, I'm not going to say we're just going to stay in our lane, but for this one, we stay in our lane. We make sure this solution works and is operable. They do the same, and then we say, okay, like, now how do we join them up? And I don't know. It's kind of it's nice to do that instead of try to solve all the problems up front and say, okay, it has to be this way. It has to be this way. It has to be this way. Because I think some people, there's times for standards, and there's other times where standards can kind of be a little baggagey. They can be a little heavy, and so
completely. I think Accord, for instance, started to become that way. It got adopted, but you go in and it's like most of the questions on here don't even pertain to what I need done. And as someone that's received Accords on the other end, it's like I have to like scroll through a million pages to find the 2 pieces of information that I need. It's not really user friendly, but it does solve the problem, right? It just creates a new one,
right? And so that's the entire idea behind design thinking, is to say, okay, let's solve the problem we need without trying to create new ones. So I think so for like our last design thinking session, we had a good group of carriers and regulators together, and we looked at, what does a data call look like currently, and where doesn't it work for you? Like, where are the pain points for you? And then based on that, our last quarter's releases were all focused around, almost basically on the UI, but then also on permissioning to make sure that there was an adequate level of privacy and privacy but transparency at the same time, to see who was open to, actually who wanted to share information at what point in the process. How do we want that process to move back and forth, so that there was a clear elucidation of what was requested and then what was willing to be presented. And then once again, just almost this really interesting way to have a conversation digitally and still come to an end process, or like an end goal that will satisfy both parties. And it's I don't want to I'm not going to get all starry-eyed, but it's kind of beautiful in its own way. Like, it really is to sort of say, okay, here's a broken process. Let's get the parties together. Let's have them talk, and let's figure out a solution that really works. And I'm like, wow, that's super neat. So
No, I like that metaphor, is blockchain as a conversation, because that is in essence what it is. I liken it to the very, very, very early days of email.
Hmm.
And I remember, some conversations I had with blockchain. We had Patrick Schmid on probably a year ago on Profiles
Hmm.
and Risk, talking about blockchain and risk block. And part of this is part of the backlash, or part of the hesitancy is, well, not everyone's going to, what if I'm the only one using it? What if the other stakeholders aren't jumping in? And it's like, to me, it's like the early days of email. It's like at some point that you get enough traction, you get enough momentum, that the folks that don't use it are actually harming themselves. Like,
Right.
they're signaling to the market that they don't have the information, or they can't be trusted to supply the information, or something to that effect. It just seems like it needs that minimum, like a fax machine. It needs a certain number to kind of get this thing started, and then
Yeah.
everyone's going to sort of need it.
This week, I think we can even go like, one layer deeper and sort of think of it almost like the internet. You know, first version of the internet was just two servers talking back and forth. And then now the internet is how you and I are talking right now. It's how everyone is going to be downloading this, this conversation. It's how they're going to listen to it. It's also how they bought all their gifts and, check their bank account. And it's just a new way for information to move. And it's a different way for information to move, but once again, it has a good use case, and has a different uh, functional existence. And
Yeah.
so it's just sort of, we're in the infancy of it. We're trying to figure out, what's the best way for this to actually work. And like you said, there's going to eventually be some really creative people that are going to be out there, and they're going to kind of put together some new ideas. We're going to have a bunch of pillars. They're going to start getting stitched together. And so if anything, it's actually, for me, I'm kind of like, all right, say what you want about a private blockchain, but it's going to start doing a lot of really neat stuff.
Yeah. And as we talked about in a private conversation, it's not a panacea.
Yeah.
So it's not like blockchain takes over the world. I would say for the most part, most people won't even know that it's operating in the background. It's
Much like most
all,
of insurance, they don't know that it's there, but it's doing a serious service to you.
yeah, yeah.
Yeah, I think I feel like I was getting backed into a corner at one point trying to have like a civil holiday conversation. And I finally had to just kind of tap out, and I was like, you know what? Like, believe me, blockchain is not going to cure gout. Like, blockchain will not, you're going to have to just stop whatever you're doing. That's something, but
Yeah.
no, blockchain will not cure gout, but can it fix a relationship that currently needs to be updated? Yes, it can. So let's go ahead and focus on the solution.
It may not cure gout, but it could be the signal, the communication tool between the drug developer and the regulator, or the hospital, to kind of send information back and forth to say, this is what we did to solve this problem, and we want it in a secret manner that only you can see, and you can follow our fully audited timeline. Who touched it, when they touched it, when lots were made, so on and so forth.
I'll tell you what, you can come to my next holiday party, and when it starts to get heated, I'll just be like, Nick, and you can come in and you can bail me out.
I'll do even better. I'll show up, and I'll talk about I'll take all the pressure off you. I'll bring up the Patriots, and we'll talk about that, and then you can team up with them, and everybody can come attack me.
Literally, it'll be everybody in the room. You'll just have a target on your back. So I appreciate
Okay.
that. That'd be
That's okay. For your design thinking for blockchain-enabled products and business models, who should attend? Who do you think would get the most out of it?
So, and so I think first and foremost, like, hats off to the SVA, because I think they really put together a good program around this one. And instead of it's definitely not a blockchain 101 discussion. It's not like, oh, come here to learn the basics of blockchain. It's kind of the understanding that here are the specific use cases that are starting to emerge within the insurance industry, and here's the way that you can start integrating them into your business. So in that sense, it's definitely geared much more towards people that can steer the ship vis-a-vis blockchain or new technology as a whole. So more of the executive level across lots of different functional groups of a company. So it could be the innovation group, if they're the ones that are really just tackling blockchain. It could be the stats and regulatory group, if you've sort of taken a step back and you've maybe heard some murmurings, through the NAIC or through any of our presentations, and been like, I think this makes a lot of sense, and I want to see how it can potentially work for me. They're a great candidate. Anybody in a tech group that just kind of says, how am I going to make this blockchain technology work with our current tech stack? Or it could be kind of to your earlier point, a CEO or somebody else just in that position that says, I know this technology is coming through. I know it has the potential to change, to add value now and value in the future. So how am I going to best leverage this? Kind of any of those folks, because like I said, it's geared towards how are you actually going to implement blockchain in your company in a valuable and feasible way. Yep. So
awesome. The program is January 29th in Palo Alto, California. It's being sponsored by the Silicon Valley Insurance Accelerator, the SVIA. I'm going to point down. There should be a link there. It'll also be in the show notes as well. I'll put the link between Thomas' fingers. Thomas, thank you so much for coming on and for sharing your I guess your future outlook on blockchain. And you had said like it's hard to talk about this in a fun way, but it actually is. It's exciting. It's hard not to be a little starry-eyed, I think, when these massive problems that have existed in insurance have a potential solution. And so I'm excited for you, and I'm excited for this particular program that you're doing.
Absolutely. Thank you very much, Nick. I appreciate it.
By the way, nice shirt.
You too. Looking sharp, man.
Awesome. My guest this week has been Thomas Jennings, the Director of Business Development for the AAIS. Thomas, thanks again.